noting that we want to keep separate in our mind the bookkeeping or accounting process and the adjusting process, even if we're the same person doing the same process, although often that is not the case, because often the external CPA firm, public accountant, or whatever is going to do the adjusting processes, oftentimes noting that the accounting goals are to communicate with customers, vendors, employees, and automate the system as much as possible, so as little focus as needed is done or focused on the accounting process, more focus on the money generation, revenue generation process. Whereas at the end of the year, most likely end of the year typically, we need the adjusting entries at least at the end of the year so that we can format our financial statements more closely to whatever financial reporting basis we're using, whether that be accrual or at the least a cash or a tax basis for our tax preparation needs. So we're imagining then I would take the information out of QuickBooks, or even if I had access to the software, make my own worksheet, usually using debits and credits, but here using the accounting equation, so we can see in a more transparent way the adjusting entries, and possibly we can map out the reversing entries as well. And then possibly put that back into the accounting system, keeping in mind and trying to think about which of the adjusting entries are permanent, which of them are timing differences, the ones that are timing differences being ones that typically have reversing entries, because the timing difference that, or the timing frame that the accounting department is using or bookkeeper is using is not wrong. It's just not perfectly on the basis that we're using, accrual basis in our case, or tax basis, or whatever it is. So we want to make it the adjustments at the period end to make it correct for financial reporting purposes, but then reverse it so that we don't mess up the accounting department. That's what we're basically working on at this point in time.